The perfect entry. It is possible if you know one of the most important notions that a trader must have, the dominance. Hi guys, my name is Pete and this is Trading Kitchen. So guys, today we're talking about dominance, how to really identify the primary trend, how to find a good structure zone by which you can correctly enter the market. Dominance is used to really understand who is winning among buyers and sellers without the need of indicators, but only by reading the graph. Okay. But what is dominance? Dominance can be identified in the graph by a price zone, for example, or a structure from which the last strong impulse starts, or that basically breaks a previous structure. Okay, this previous structure up to the moment was defining the winners on the market. Okay, on the chart it is easily identifiable by a candle. Okay, for example, a particular candlestick pattern or an order block, or like a pin bar, for example. Okay, or an engulfing. Anyway, why is it so important? Why is it important to correctly identify dominance? Well, for at least two reasons. First of all, because it is the fastest and the most effective way to know the primary trend, because it really indicates who at that moment is winning on the market. Second, no less important, it is for the simple fact that dominance is nothing more than, how can I say, a very, very strong, a very important collection, I can say, of orders. Okay, and therefore, as such, they will form a zone in which the price will react in some way, maybe in a very, very easy way, very slow, or very strong. Okay, very strongly. It will react in the future. Okay, so this structure is going to be very useful. Okay, on the future. So all this thing without the need for misleading indicators, moving average. I use moving average, but only for momentum, to really understand the momentum, without need of indicators or stuff like that. Okay guys, so dominance is one of the most important concepts that the trader can have, because it basically requires him to think about liquidity. That's a very, very important concept, a very important notion. If you're able to trade by liquidity, so following the liquidity, understanding where liquidity is, okay, so you're going not to trade on hypothesis. Okay, if you look exclusively at the graph, okay, looking for the liquidity, it will be and this way so much easier to understand the logic that is behind the market movements. Okay, so we now are on USD 4-hour time frame, but dominance is absolutely a fantastic notion, just because you can use it on every market. You can use it on every time frame, just because it is not something that depends on the market. Okay, it depends on the asset. Okay, so forex or commodities or crypto or stocks. Okay, it is not depending by the kind of the market in which you are. Okay, it's just the graph. Okay, it depends on the logic by which big boys, so banks, institutionals, want to move the market. Okay, so for example, so basically how to identify dominance. First of all, look at the impulse. Okay, so for example, this one. Okay, this impulse. You just have to wonder from where this impulse has started, and here it's clearly from this candle. Okay, let me zoom. As you can see, this candle, which is the last blue one. Okay, so this will be a very good zone from which in the future price will probably react. As you can see, okay, all this zone is very important. As you can see, price, this is Wyckoff structure. Sorry, typical Wyckoff structure. Okay, price 1, 2, strength of signal of weakness, liquidity catching, as I told you before, goes down, break this low, goes up to take this liquidity. Oh, sorry. Again, this liquidity with this kind of pin bar doji. I don't remember the name, but it's very important this week. Okay, very long week. We are on 4-hour time frame, and the price finally goes down. Anyway, as you can see, this everything has started from this zone. Okay, which is dominance. So let's go back again. We have this impulse. Okay, price broke this support. Okay, this support, so we now are on a downtrend. Okay, we are on a bearish review just because the graph told me this. Okay, price broke all the structure from which before by which we were considering a bullish trend. Okay, so we are now on a bearish review. Okay, we have to look for we have to look where we can enter the market again. Okay, as I told you before, I will not consider any entry, any short entry on a discount area. What is discount area? You can see in another video that I made in the past video. I will link in the description. This is the discount area. Okay, and this above 50 is premium area. Okay, more or less here. So I will look for a short from in this area. Okay, to be more precise, looking for a dominance, the previous dominance. So we have to wonder which is the impulse, okay, the zone from which a previous impulse had started. Okay, so the previous impulse, where is this one? Okay, so the previous buyer's dominance is this one. Okay, you have to consider the whole candle. Okay, a lot of traders consider only the body of the candles. I prefer to consider also the wick. Okay, for a simple reason that the wick tells me how strong this impulse is. Okay, the higher the wick is, the bigger the wick is, the stronger the impulse will be. Okay, so basically the wick are is formed by orders. Okay, basically, so why not consider them? So this is a very important zone. You can clearly see, just because price, even if the momentum is a strong bearish momentum, just you can see by the inclination. Okay, look at this inclination. So there are a very strong seller power here. Okay, but as you can see here with this candle, price initially refuse to go down. Okay, what does it mean? It means that this is a very good zone that works. Okay, it means that here there are lots of buyer orders, okay, that needs to be filled up. Okay, and that's what basically happened. Okay, but it was not strong enough, so price go down. Okay, but as you can see, price react here. Okay, so to find correctly dominance, you have to consider the impulse and try to understand from which impulse had started. Okay, this is very important. In this case, for example, let me remove drawings. This is not a dominance. Okay, sorry, this one. This is just a small consolidation. Okay, here price need to be to get liquidity to go up, but this is the very zone from which this big movement had started. Okay, so let's keep on going on this Euro USD to make some other example. This is another dominance. Okay, it's simple. How do I know that? Just because from this point there are no more red candles. Okay, from here no more red candles. So from this zone there are a lot of buyer orders. Okay, so as you can see, it works here or not. Okay, but it works. Okay, just because from this zone price had react Okay. This could be another dominance, okay, just a small one for scalping, for example. Okay. So price react here. The dominance is important just because, as you can see, until price, this is another dominance. This is okay. This is the point that we have to consider from a bearish overview. So until price will not broke the structure, okay, on 4-hour time frame, we have to only consider short to trade by the trend, obviously. Okay, if you like counter trend trading, this is not important for you, but our focus is to try to get statistic, okay, by our side, okay, and statistic tells me that I have to trade using the trend, okay, by the primary trend. So until this dominance, this seller dominance will not be broken, we'll consider only a short position. Why this is dominance? Easy, just because from this point this huge impulse had started. Okay, let me see if, for example, yes, okay, as you can see, price reacted here, take a liquidity, reacted here, broke this dominance, okay, broke the structure, but there's a kind of fake breakout here, okay. But as price broke this dominance, okay, I will not enter anymore on a short overview. Okay, in fact, the fake breakout was this one. Okay, was this one. Okay, here price needs the liquidity to keep on going, okay, on a bullish overview. But as price broke this structure, okay, and this is clear, it means that you want to go up, okay. This doesn't mean that it will go up soon, okay. Fake breakout, liquidity, and then it goes up, okay. Where is the dominance here? This is another dominance, okay. As you can see, the notion of dominance is close to supply and demand, but is not the same thing, okay. Dominance could be also a supply or demand zone, okay, but it's not the same thing. But as you can see, in this case, I will consider a long only above this structure, okay. Above the structure we have only long position. As you can see here, price strongly broke this structure. So from this, where is the dominance here? This one, okay. So from this structure I will only consider a short position. In fact, price is going down, okay. And this quite easy to identify dominance just if you get a zoom out, okay, and you are able to see the wall movement, okay, it will be too easier, okay, it will be easier identifying a dominance, okay. So for example, in this case I will not consider a long position until this zone will be broken and we are close to it, okay. Okay guys, I hope everything is clear. Same old stuff, subscribe the channel, activate the bell to see the notifications, but first of all I just want you to use the comment section below to let me know what you think about this video and what you want to see next. And I hope you appreciate this kind of free video contents, okay. Thank you guys, see you.